Markets off to a slow start this week. Benchmarks finishing a volatile session marginally lower, falling for a second straight day. Investors on Dalal Street await the outcome of the RBI MPC meet, which commenced today. Though Sensex was able to recoup from the day's low, it ended 94 points lower, shutting shop at 55,675. Nifty too had a flat close and slipped to 16,570. The insurance behemoth LIC continued to disappoint. The stock, which has been on a downhill since its listing, hit an all-time low with shares sliding below 800 rupees. With an almost 3% fall in shares today, the market cap of the company also fell below 5 lakh crores. Among the 29 laggards in the Nifty basket were Shree Cement, BPCL, Asian Paints, Ultratech Cement and Hero Motorcorp. Gains in metal stocks and a fag-end rebound in select financial shares helped benchmarks to recoup losses. Bajaj Auto, JSW Steel, Tata Consumer, ONGC and Apollo Hospitals, some of the gainers among the blue chips today. Joining us now, our global business editor, Udayan Mukherjee. Udayan, what's your take on the current market action? We seem to still be in the throes of volatility, of course. And LIC specifically, I wanted to get your take on, given the fact that it's actually already trading at its all-time lows. So lack of action, completely emphasized even post-listing.
Yeah, LIC has been a bit of a letdown, Abha, and I can't say that I'm very surprised by it because it looked like it was setting up for a post-listing disappointment. If you look at the internals of LIC and the way their embedded value is calculated, it appears to me that they will actually move with the market. If the market goes down and you see a lot of volatility, LIC will be regarded as a proxy for the stock market because of how much it derives in terms of its value from mark-to-market gains from the equity market, and there is just no escaping that. So frankly, I'm not surprised that LIC has had a weak listing for various reasons other than this, and it might continue to grind in a bit of a range. I think some part of the price adjustment has already happened, trading at below 800. A little bit more might happen, but I don't see it collapsing like Paytm, but it may just begin to find some kind of a trading range, maybe in the 700 to 800 kind of price band, and that's my expectation with LIC. On the market itself, I think it's in a pause mode. We've had a grinding fall over the last couple of months. The Nifty went down and successfully defended its near-term bottom of 15,700, 15,800. We've come back 5-6%, all the way back to 16,500, and now I think the market is at a bit of a crossroads after the pullback rally, and is trying to assess whether it's prudent to take it further from here, or the market just needs to consolidate till the next set of data is manifest itself. The next set of data could be global in nature, on how global markets and the inflation data pans out, or it could be local as we get the earnings season, the April to June earnings coming in July, which might indicate that there might have to be more downgrades in our earnings expectations out here. Both of these are very important factors for the market, and those might be the triggers which determine whether the Nifty can edge its way back to 17,000, or it needs to go back and retest those recent lows or even climb lower. As I said last time, I'm not confident that the market's made its final low for the year, and I think we will probably continue to see these falls and these pullbacks and fair degree of volatility as we go ahead. And we are in the middle of a pullback right now and a consolidation phase post that pullback. So the market might try to work with a kind of a range for the moment and then wait for the next set of data to provide the impulse.